Altcoins are finally showing strength. Your feed is yelling Altseason, your friend is shilling you a microcap, and you're thinking, how much juice is left?
How much we got left, baby?
Well, Bitcoin Dominance is the chart that helps us answer that. Think of it as a vibe check on how much of crypto's pie sits in Bitcoin versus the rest. It isn't perfect, but it's very useful if you know its quirks. So today we dive into Bitcoin Dominance, what it is, when alts typically explode, and how to use it without panic rotating out of BTC. My name is Guy, and unlike that dusty VHS you found at the bottom of your parents' wardrobe, this is a video you really should be watching. Now, although we'll be looking at crypto markets today, I must make one thing clear. I am not a financial advisor, and nothing in this video should be considered financial or investment advice. This is purely educational content meant to inform you about Bitcoin dominance. So if that sounds good, hit those like and subscribe buttons, smash that notification bell, and let's get into it. So let's start with what exactly Bitcoin dominance is, and perhaps more importantly, what it isn't. Bitcoin dominance, denoted as btc.d on TradingView, measures what percentage of the crypto market belongs to BTC based on the top 125 coins. When Bitcoin dominance is rising, it means the market is favoring BTC. When Bitcoin dominance is falling, it means the market has a relatively greater appetite for shiny altcoins, or stablecoins for that matter. This means traders can use Bitcoin dominance as a compass to help navigate market sentiment and altcoin appetite. For example, Bitcoin dominance had a steady rise since the start of this cycle, from 40% in December 2022 to its recent high of 66%. Now, this was largely due to capital flooding into newly launched ETFs and corporate treasuries. And indeed, the chart paints a pretty picture of BTC stealing the spotlight and rising to its status as an institutionally accepted asset. Now, it's important to repeat that Bitcoin dominance is only looking at Bitcoin versus the top 125 cryptos by market cap. So when you stare at the Bitcoin dominance chart, you're looking at BTC versus the biggest slice of the altcoin universe, and not every single crypto that's ever launched. That omission surprises some people when they first hear it, because Bitcoin dominance is often quoted as literally Bitcoin's share of the total crypto market. But the truth is, most of crypto's total value still sits inside that top 125 bucket. So even if a bunch of small cap tokens never make the list, the number still tells you where most of the money is parked and how money is flowing through the cryptosphere. Make no mistake, this is still very useful for investors trying to assess the market. Having said that, like any other metric, it's not perfect. New token launches, airdrops, and unlocks can swell the altcoin side of the equation without any real rotation out of BTC. In these scenarios, supply and altcoin market cap is just added overnight. At the same time, Bitcoin's supply only creeps higher with block rewards, which are a much more gradual process than token unlocks. So, BTC's market cap doesn't jump the same way unless price does, but it grows nonetheless. Liquidity muddles things further. You can dump $1 million of BTC on the market without having any impact on the chart. However, try that on a random rank 90 altcoin and you'll likely skid the price into the floor due to altcoins having less liquidity. Stablecoins, meanwhile, add another wrinkle, particularly as they're one of crypto's fastest growing sectors, currently sitting at a market cap of $262 billion and rising. When Tether or Circle expands their supply, Bitcoin dominance can drift lower even if nobody's aping into altcoins. Now, some analysts strip stables out and others don't, but the default version of Bitcoin dominance provided by TradingView keeps stablecoins in. So that's just something to keep in mind when considering how big BTC's slice of the crypto pie truly is. So, given this fact, you should think of Bitcoin dominance less as gospel and more as a money flow thermometer between Bitcoin and everything else with meaningful size. If you know the basket's boundaries and the distortions that can push it around, it stops being a mysterious number and starts being a handy signal. But before we start using that signal to help us see where things are going, it helps to zoom out and see how Bitcoin dominance behaved in past cycles. Every major Altseason we remember was paired with a massive slide in Bitcoin dominance, not just a drop. That's the pattern we're hunting for now. So first, let's roll back to January 2017. Over the course of 1 year, Bitcoin's share absolutely cratered from the mid-90% range to the mid-30% range. That collapse lined up with the ICO boom and what some consider the original altcoin mania. ETH, XRP, and thousands of other new hopefuls all ripped upwards, while BTC's slice of the pie shrank. Fast forward to the last big run in 2021. From February that year to mid-May, dominance slid from about 62% to 40%. Notably, the majority of that dominance drop coincided with both BTC and altcoins soaring in USD terms. However, May 2021 is remembered as one of the major crypto wipeouts, and rightly so. So, keep in mind, Bitcoin dominance can go up or down in very different market environments. After that flush, Bitcoin dominance didn't just spring back to old highs. It spent more than a year stuck under 50%. And that tells you dominance can stay depressed long after the fireworks end. And now to this cycle. As mentioned earlier, dominance reached as high as 66% last month, and that zone proved sticky. Following a steady rise since December 2022, with only one drawdown greater than 10% back in November last year, it's now showing some signs of cracking. It dropped 5.8% in a single week back in June, its sharpest weekly fall in over 3 years, and it's currently chopping around 60% at the time of making this video. Obviously, a lot of this drop is due to the rise in ETH's price and relative strength against BTC, as seen in the ETH-BTC ratio. With strong ETF flows, new stablecoin legislation in the US, and corporate treasuries buying up ETH, all signs point to the show continuing. Now, these developments were not lost on crypto Twitter or crypto media outlets either, with tweets and headlines echoing a call for another big alt season. So, where does Bitcoin dominance likely head? Well, if history rhymes, the first real zone that says, oh, alts are really moving, would be the mid-50s. In that area, dominance has had a tendency to chop, while more capital takes some time to begin rotating into altcoins. Bear in mind, though, that markets do not move in a straight line. If dominance just had its biggest weekly loss in over 3 years, a short-term bounce is likely, even if the likelihood of a continued drawdown seems high. If the mid-50s shelf does give way, the classic full send band goes all the way down to around 40%, the same neighborhood where both 2017 to 2018 and 2021 alt peaks formed. Now, that doesn't mean it has to repeat perfectly, but it does give you a realistic target. And remember, once Bitcoin dominance plunges, it can hang low for months, even after a potential blow-off top that crypto is known for. Don't forget that you don't always get an instant snap back to Bitcoin leadership after the bear market starts. Anyways, the key takeaway is that if ETH is just warming up its move and bringing altcoins along with it for the ride, then Bitcoin dominance at the mid-50s would be the first area to look out for. If ETH and the rest can snowball their momentum, we could see mid-50s break and some real fireworks follow. Whatever happens though, the levels on the map are defined and they can be quite useful when setting your expectations, instead of reacting to every altcoin pop on those days when green candles are everywhere. You know what else is useful, particularly if we see dominance continue to fall? The Coin Bureau deals page. Because that's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and cashback on deposits of up to 75% on crypto exchanges. These deals won't be around for long though, so take advantage of them ASAP using the link down below or the QR code on the screen. So, we've had a look at what Bitcoin dominance is and where it may be heading, but what actually influences the metric? Well, looking at this cycle, we've had a pretty unique cocktail of factors that pushed dominance on its steady ascent. From the bare lows in late 2022 all the way up to June of this year, we saw dominance rising without taking a breather along the way. And this was thanks to the spot Bitcoin ETFs narrative, followed by the very real capital inflows upon their launch and relentless corporate buying too. US spot Bitcoin ETFs have stacked roughly $54 billion in net inflows since launching in January 2024. Although corporations adding BTC to their treasuries is now a trend too. It was started by Michael Saylor of MicroStrategy. Now known simply as Strategy, the firm has accumulated an unbelievable 607,000 BTC and counting, around $72 billion at current prices. That constant bidding propped up Bitcoin's share of the market, while a lot of alts were still limping out of the rubble. Now, beyond that unique blend of factors, the usual risk-on, risk-off cycle still influences Bitcoin dominance too. When markets feel edgy, capital sprints to the safe orange coin and Bitcoin dominance rises. When confidence returns, traders fan out into alts and Bitcoin dominance falls. As you might have guessed, we just saw a preview of the latter, with Bitcoin dominance dropping nearly 6% in a week back in June, its sharpest fall since 2022. This is classic alts are waking up behavior. Flows into non-BTC majors have amplified this dynamic since then. Spot ETH ETFs finally caught real momentum in July, pulling in a record $727 million in a single day and over $2 billion in a week. The parallels with BTC's ETF-driven momentum are clear, and this is further matched by corporations copying the BTC Treasury playbook with ETH treasuries. If ETH keeps absorbing institutional dollars, especially if ETF staking gets added to the mix, it weakens Bitcoin dominance because that money isn't buying BTC. And, historically, of course, ETH rising like this has been good news for the wider altcoin market. Those nuances we mentioned earlier, though, still apply. Stablecoin supply keeps ballooning, with around $100 billion in market cap added over the last year alone. Token unlocks do the same. More float on the alt side means Bitcoin dominance can drift lower without a single sat moving. Nevertheless, the big picture is this. ETFs and treasuries can shove Bitcoin dominance up for months, macro fear can spike it in days, and sector-specific flows, like ETH right now, can drag it down just as fast. And of course, we can't ignore stablecoins and unlocks. So, know which force is currently in control, and the chart stops being noise and starts telling a story. Okay, now for the fun part. What can all of this tell us about how much alts could rally? Bitcoin dominance gives us an idea about the market's preference for BTC over alts and general risk appetite. But if we pair that with the top 125 crypto assets, we can gauge what kind of altcoin upside we're looking at. As it so happens, there's an indicator that tracks the top 125 cryptos, and it's called Total, which measures the total crypto market cap. Total swells when fresh money floods in, or when prices moon, and shrinks when the whole space deflates. So, with that in mind, let's stitch the two metrics together. Bitcoin dominance falling while total rises means new capital, or recycled Bitcoin gains, is chasing alts. If Bitcoin dominance is falling but total is flat, it signals an internal shuffle from Bitcoin into larger alts without expanding the overall pie. Both climbing at the same time means capital is pouring into crypto so fast that Bitcoin's slice of the pie still grows. And if we flip the script, total sinking and Bitcoin dominance rising is a classic risk-off tell. Traders are dumping alts harder than they're selling BTC. Now, the current market shift, as we've discussed, is clearly a positive one for alts. So, let's sanity check some upside potential with some simple numbers. Leading forecasters have BTC reaching $150,000 to $200,000 or more at the peak of its current run. If we take the lower end of that band, $150,000, that gives us a BTC market cap of $3 trillion. Now, if dominance hits around 50%, as it would in the scenario we considered before, total would be roughly $6 trillion. Subtracting BTC from that leaves another $3 trillion for altcoins and stables combined. And besides total, there's another useful metric to keep in mind if you're trying to narrow the focus to mid and small caps. That ticker is Others, and it removes the 10 largest assets, including BTC, ETH, and leading stablecoins USDT and USDC. What's left is pure mid and small cap action, the part of the market that usually goes wild at the height of alt seasons. There are more adjusted total metrics that can be useful, but keeping an eye on total for the big picture and others for the speculative heavy tail is more than enough. In December 2024, CoinMarketCap's measure of the total meme coin market cap swelled to $137 billion, even while Bitcoin dominance sat near cycle highs. This is proof that mid, small, and micro caps can soar long before Bitcoin dominance officially cracks. While it's important to avoid doing too much business far out along the risk curve, this does tell us that upside opportunities in crypto are always there, whatever the conditions. With that said, when others starts to rip alongside a falling Bitcoin dominance, that's the market signaling full send on smaller names. If it is up but still behind total 2, which excludes BTC, as it is at the time of making this video, the rally is probably focused more on ETH and a few big caps. So, pull up Bitcoin dominance, keep total and others in neighboring panes, use adjusted totals for additional analysis if you wish, and let these metrics communicate the flow. And right now, based on historical trends, they're communicating some significant upside for alts. But what does that really mean for the wider market? When Bitcoin dominance breaks down properly, leadership shifts. BTC stops sucking up most of the oxygen, and liquidity fans out into everything else. You'll notice it in price dispersion. Suddenly, it's not just BTC moving, whole sectors and forgotten narratives light up in waves. Historically, ETH usually moves first, then other large caps, then mid and small caps, and eventually the truly degenerate stuff, if the move lasts long enough. However, note that this cycle brought something unique. The ease of accessing cryptos on-chain means we often see a sort of barbell, with speculative cryptos like meme coins rallying alongside the large caps. However, if Bitcoin dominance continues to break down, we can expect extended trends, volatility spikes, and narratives starting to matter more than clean macro correlations or blind meme coin speculation. That's the classic Altseason feel, and a falling dominance line is the backdrop. Projects with real liquidity get first dibs on fresh capital, while smaller names can spike 30% in an hour simply because 5 traders decided to buy at the same time. We should also note that there's often an uptick in scams of all kinds, because every cycle's breakdown in Bitcoin dominance invites nefarious opportunists. So be wary of that. As we've discussed, if you're heavy BTC when dominance rolls over, it doesn't automatically mean dump everything and chase alts. It just means the environment is shifting from single leader to multi-leader. Some people are fine with BTC doing its thing while they watch the whole circus from a distance, and that is totally reasonable. Others prefer to nibble at the edges, maybe rotate a slice into names they already researched instead of sprinting blindly into whatever is currently green. The point isn't to tell you which path to take, it's to highlight the trade-offs. Staying mostly in BTC can feel slow if alts are ripping day after day, but piling into illiquid coins can feel brutal if Bitcoin dominance snaps back, which tends to happen even in altcoin seasons. Having a mental plan for those whiplash moments, whether that's trimming positions or simply not staring at the chart every hour, keeps you from knee-jerk decisions. Plans made when you're calm beat "I'll figure it out in the moment." Use charts as a context. A falling dominance line plus a rising total tells you the pie is growing and alts are getting the love. Falling dominance with a flat pie says it's mostly rotation. And a sudden dominant spike while prices stall is the market waving a yellow flag. None of those signals demand an immediate move, but they frame what kind of market you're in so you can act or not act on your own terms. After all, that is the whole idea behind watching Bitcoin dominance in the first place. It's not there to hand you trades. It's there to keep you oriented when the noise gets loud, one way or the other. So, if this breakdown helped, drop a like, hit subscribe, and tell us which dominance level you're watching and which altcoin sector you think benefits the most. And if you want to learn about how altcoin ETFs could amplify a breakdown in Bitcoin dominance, then be sure to check out this video over here. Okay, that's all from me for today. Thank you as ever for watching, and I'll see you next time. This is Guy, over and out.